Ladies and gentlemen, good day and welcome to NIIT Ltd Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Thadani, Vice Chairman and Joint Managing Director. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. Thank you very much for your continued interest in NIIT Ltd and joining us today in the middle of a busy result season. We hope all is fine at your end. My purpose of this call was for us, our management team, to provide you an update on our Q1 results for the year 25-26. Also, some specific developments in terms of inorganic activity and also the way forward. I have with me Pankaj Jathar, who's the CEO of the company, Sanjeev Bansal, who's the CFO, Kapil Saurabh, who manages M&A and investor relations, the whole team, the head of HR technology, and we also have some of our directors. Mr. Sapnesh Lala is here, who's the non-executive director, and Rajendra Pawar, who will be joining us, and the third founder, Mr. Rajendran, who is joining us from elsewhere. So, to make sure that we can answer all your questions and give you a correct brief of the situation, I'll just set the context briefly, and then after that, Pankaj will take us through the details, and then I'll step in whenever required. So to start with, I think it will be safe to say that we have all experienced some really unprecedented times with a very high level of uncertainty, economic volatility, and geopolitical turmoil over the last few months. With this background, let me begin by acknowledging that our organic performance this quarter does not meet our own expectations. In fact, we fell short of our guidance, both in terms of revenue growth as well as margins. That said, it's important to analyze, therefore, what happened and where did our energies go. So there was one part which was some deliberate actions that we took, and the second where we could not foresee and it happened to us. More importantly, the efforts that we have made to remain confident in the direction that we are headed, and I think we are starting this call with that deep confidence. It's important to note that during the quarter, in addition to the organic activity, we consummated 2 inorganic transactions: acquisition of 70% stake in iamneo, a very interesting AI-powered deep skilling SaaS platform, and which adds a new capability, a new market segment, a new experience to NIIT. And the second was the purchase of the stake of ICICI Bank in our joint venture, IFBI, NIIT Institute of Finance, Banking and Insurance Limited, thus making that as a wholly owned subsidiary. I'll invite Pankaj to walk us through this quarter's performance, and then we'll step in and discuss the inorganic activity as well. Over to you, Pankaj.
Thank you, Vijay. Good afternoon to everyone. Thank you for joining us today for our Q1 FY26 earnings call. I echo Vijay's sentiment that we fell short of our guidance both in terms of revenue growth as well as margins. Let me first talk about what impacted the Q1 performance. And as we start, I want to highlight that Q1 is a seasonally weak quarter for the business. Also that the results include the impact of iamneo acquisition and the IFBI transaction, which have been consolidated from April 17th and June 11th respectively. Let me talk about revenue. Revenue for quarter one was 841 million rupees, up 2% year-on-year and down 3% quarter-on-quarter. IMNEO financials are consolidated from April 17. The above includes rupees 52 million in revenue contributed by IMNEO. Excluding the same, the organic business declined by 4% year-on-year and by 9% quarter-on-quarter. EBITDA was negative 63 million. While we had stated EBITDA will be negative this quarter, this includes the impact of the lower revenue and the planned investments. The business continued on its planned course of investments, which delivered an improved order flow, but did not benefit revenue or EBITDA. Depreciation was 67 million versus 59 million last quarter and 56 million last year. This includes impact of the new acquisition. Net other income was 179 million as compared to 221 million last quarter and 155 million last year, primarily comprising of treasury income. Profit after tax for the quarter was 44 million as compared to 131 million last quarter and 78 million last year. Earnings per share was rupees 0.32. Excluding the impact of inorganic transactions, PAT was roughly similar to last year. Based on strong feedback from some of you, we would be sharing additional metrics. These are order intake, and we will also give you a split of the enterprise and consumer business. The order intake. Order intake in Q1 was 1,065 million as compared to 778 million last year and 742 million last quarter, reflecting early impact of our investments. In terms of business mix, enterprise business contributed to 574 million in revenue this quarter and was up 7% year-on-year. The consumer business contributed the balance to 67 million, which was down 8% quarter-on-quarter. The business mix was 68:32 in favor of the enterprise business in quarter one versus 65:35 last year. In terms of product mix, revenue from technology programs was 587 million, up 7% year-on-year, while revenue from BFSI and other programs was 254 million, down 9% year-on-year. Technology is to BFSI, the ratio was 70:30 versus 66:34 last year. I'll run you through some balance sheet numbers. The balance sheet metrics remain strong. DSO days was at 53 days, in line with the 54 days last year and 51 days last quarter. We are slightly up quarter-on-quarter due to seasonality. Consistent with the investment cycle the company is in, CapEx for the quarter was 81 million rupees. Cash and equivalents at the end of the quarter at rupees 7,115 million versus 7,580 million in Q4 last year and 7,185 million last year, quarter one. Employee headcount at the end of the quarter was 885. This includes 151 employees from IMNEO. Our Q1 performance was weighed down by several external and transitory factors. Global system integrators, GSIs, are once again experiencing discretionary spending cuts and a slowdown in decision-making cycles. This prolonged uncertainty directly affected hiring, onboarding, and training volumes, which is in sharp contrast to the pickup we had anticipated earlier in the year. In parallel, the banking sector saw a clear pivot to a risk-off stance. Elevated credit deposit ratios, rising stress in retail loan portfolios, and lower attrition levels prompted several banks to reassess and defer hiring plans, which in turn impacted committed and planned onboarding programs. These dynamics resulted in sudden and deep reduction in training spends, creating a double whammy across GSIs and banks, significantly impacting our early career skilling and enterprise training volumes. We witnessed delays in order intake and uncertainty leading to execution slippages across early career and workflow learning programs, resulting in significantly lower training volume compared to our plan, affecting the utilization in ways we could not foresee and act on. The geopolitical conflict in the region had a direct though localized impact during a 2-week period in May. The situation led to cancellation of certain planned training batches and delays in the commencement of others. Beyond the immediate disruption, the heightened tension contributed to a distracted decision-making environment, further affecting onboarding and program execution. Some of these effects extended into the following weeks, creating a cascading impact on training volumes for the quarter and consequent impact on utilization. On the margin front, performance was impacted by planned front-loaded investments in AI and also in the go-to-market GTM engine, people, platform, products, partnerships, as well as sales and marketing. We've invested in all of these across both enterprise and consumer businesses. Transaction-related and integration-related expenses tied to our recent inorganic growth actions. We had certain transitionary expenses as we took advantage of the environment to fine-tune operations. Lower utilizations arising from order delays and onboarding deferrals below the planned capacity, leading to negative operating leverage. An update on our strategy, actions, and progress on those. Despite these headwinds, this was also a quarter of purposeful execution and strategic build-out. We laid down strong foundations for building momentum in our business. Let me highlight a few key developments. As guided earlier, we accelerated GTM investments, inducted senior leadership, expanded our sales teams, and increased brand visibility through targeted marketing and influencer campaigns. On the technology front, we revamped our learning platform, introduced deep skilling programs in new age technologies, and integrated agentic AI tools to enhance learner outcomes and internal productivity. We expanded our offerings to include generative and agentic AI and digital coaching for banks and enterprises, and solutions tailored for sectors like auto, telecom, and consumer electronics. OEM partnerships now stand at 35, further strengthening our partner and solution ecosystem. We completed the acquisition of iamneo, which brings an AI-led SaaS platform for deep skilling and personalized learning capabilities, and adds universities and colleges as a new channel, a strong strategic fit with clear synergies already in play. We also acquired the remaining 19% in IFBI from ICICI Bank, simplifying our structure and improving our agility to address the BFSI sector. And importantly, we are already seeing the early impact of these investments. We had a material uptick in order intake in Q1, and the momentum has continued into July, improved digital engagement and showing a stronger pipeline momentum. We signed 10 new logos this quarter across BFSI and our other business segments. Further, despite the headwinds, order intake in the enterprise segment was up 35% year-on-year, and overall order intake, which includes iamneo, was up 37% year-on-year. The road ahead. While the near-term environment remains volatile, our conviction in the medium to long-term opportunity is intact. When we met in the first half of May, our assessment was that the worst of the macro headwinds were likely behind us. However, the external environment turned more adverse than anticipated as the quarter progressed. Although global tariff pressures and macro uncertainty were known risks, the depth of the slowdown in onboarding across GSIs and BFSI and the cautious hiring sentiment became more pronounced later in the quarter. This contrasted with the strong intent on hiring we had heard from IT majors and consequent expectation on hiring pickup. Also, while the geopolitical conflict in the region had already occurred earlier in the quarter, its cascading effects continued into the second half, leading to deferred decisions that reduced execution velocity in some programs. At that time, we were also seeing early indicators that the strategic investments we had made in our go-to-market engine, expanded solution offerings, and brand visibility were beginning to show positive traction. Importantly, those investments continue to deliver the intended impact. We've seen progress in areas like order intake, new logo wins, digital engagement, and customer pipeline, all of which validate the strategic choices we made. The momentum has continued into Q2. Early indicators, stronger order intake in July, shows that our investments are causing an uptick in key metrics. In spite of the uncertainty, we remain confident in delivering sequential growth in Q2 and a steady progression through the year. As a result, the growth momentum we had expected to convert in Q1 has now shifted out into Q2. The strategic momentum remains intact, but the realization of outcomes has been delayed by a quarter and is coming at a higher than originally anticipated negative impact to profitability. We expect strong sequential growth in Q2, driven by improving order flow driven by our GTM investments, which has created a stronger pipeline, better execution velocity, and greater utilization of delivery capacity. However, given the Q1 base, our full year-on-year growth is now expected to be lower than our original guidance. That said, we firmly believe Q2 will mark the beginning of a gradual and sustained recovery. Our investments in GTM, portfolio expansion, and technology are now starting to yield results. The market's structural need for advanced next-generation skilling, particularly in AI, digital, and domain-led learning, remains robust. We are well positioned to serve this demand. We continue to work on the inorganic growth mandate driven by the board. Now, coming to our guidance. The current environment continues to be marked by significant volatility and uncertainty. Despite this, based on a strong order inflow in Q1 and July, we expect Q2 revenue growth in the range of 13 to 16%. As we continue to invest in strategic initiatives, margins for Q2 are expected to remain marginally negative. For the full year, we project revenue growth of 15 to 20%, contingent on macroeconomic conditions not becoming worse than they are. Given the fluid external environment, we will reassess and update our guidance on a quarterly basis. Medium to long term, we continue to see a significant opportunity ahead and remain fully committed to delivering on our long-term strategic objectives. I need to reiterate, NIIT has a strong and trusted brand, a differentiated deep skilling methodology delivered over a scalable AI-powered delivery platform with proven outcomes. We have 200 plus active corporate partnerships, customers with revenue greater than 90% from repeat customer orders. We have 35 OEM partnerships that give us early access to cutting-edge technology. Strong balance sheet to continue investments in innovation and growth. Significant business transformation cycles ahead, which would create demand for specialized talent. We are well poised to take advantage of that demand. The focused entity enables us to be nimble and agile to address this market. We will continue to look for opportunities for both organic and inorganic growth. We completed one of these in April of a young, fast-growing, profitable, and innovative company. I will invite Vijay back to provide us an update on iamneo.
Thanks, Pankaj. I'll just give a brief. I think you've all been through the releases that we made on strategic acquisition of iamneo. We bought a 70% stake in iamneo EduTech Private Limited, a leading provider of deep skilling technology training solutions through a scalable AI-powered SaaS platform. The transaction was approved by NIIT's Board of Directors at its meeting on April 17th. And under this agreement, NIIT will acquire the remaining 30% in phases from iamneo's promoters, subject to achievement of agreed financial milestones. iamneo's founding leadership is continuing in their existing roles and continues to drive growth. This strategic acquisition unlocks substantial growth opportunities, enabling NIIT and iamneo to deliver robust, outcome-driven learning solutions at scale for undergraduates and early career professionals through universities as well as corporates. The initial transaction value, that is 70% stake, was 609 million, which included 100 million primary infusion and rupees 509 in secondary purchase, subject to closing adjustments and true-ups. NIIT will acquire the remaining 30% in phases from FY 25 to 30, linked to defined performance milestone. The transaction is expected to be growth, margin, and EPS accretive from the very first year. So we are very excited about this achievement and warmly welcome iamneo's team, founders, and their full family to the NIIT family. IMEO's innovative solutions significantly enhance our capability to deliver impactful digital transformation curricula at scale. And I think we've got going from the word go from 17th April, and I think are doing some exciting things together. The second transaction is the purchase of the stake of ICICI Bank in our joint venture, NIIT Institute of Finance, Banking and Insurance. In June, NIIT purchased 19.28%, 18.78% from ICICI and 0.49% from certain individuals in IFBI from ICICI Bank and individual shareholders at a consideration of rupees 62.7 million. Consequent to this, IFBI is now a 100% subsidiary of NIIT Ltd. This transaction enables simplification of operating structure and increase in speed and agility in decision-making and expansion of scope substantially beyond banks in the BFSI industry. So though it was a challenging quarter like Pankaj shared, it was also a building quarter. We believe that the strategic levers we have activated in quarter one are setting the stage for a stronger performance in the coming quarters. We are confident that the groundwork we have laid will translate into both growth and acceleration, as well as margin improvement as we go on. I would like to now open it for questions, so that we and our full management team here will be happy to answer. Over to you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question.
So while people are figuring out their questions and digesting what we have just shared, let me ask Pankaj to use this time to talk a little bit about our AI initiatives and how we are leveraging AI to build a very strong competitive edge in the markets that we operate in. And I will also tell Sapnesh, as Sapnesh in fact has talked about it on other platforms, to supplement what Pankaj talked about.
Sure. Thanks, Vijay. So we've already shared with you that our business is on enterprise and consumer side. So I will talk about our AI initiatives along those lines. So on the enterprise side, we are working with a number of customers where we are helping them understand how they can leverage AI in their business. So we are training management teams, leadership teams on better utilization of AI internally, and then training organizations on productivity improvements using AI. We have built training programs along these lines. We have also built some tools which companies can use as sandbox for practicing or understanding how they can utilize AI. That's on enterprise side, external training. On the consumer side, we have incorporated training programs as part of products that we sell directly to consumers, and they can skill themselves on how to use AI in their career and progression. On the third dimension, we are also using AI internally for NIITians to become more productive. We are using it very specifically in our courseware creation processes and in our program creation to improve our productivity cycles. And I would love Sapnesh to talk to us a little bit more on what the NIIT ecosystem is doing with AI.
Thanks, Pankaj. I think AI is fundamentally changing how a number of jobs get done, and this change is going to be rapid, and it's going to be change is going to be quite fundamental. So, as Pankaj talked about, we train on or educate folks on a number of different job roles. For example, programmers or QA engineers or bank relationship managers or wealth managers across the two key market segments we service. It's not that programming will go away, but how programming gets done will change dramatically. Programmers will be able to use AI to become significantly more efficient in their ability to build applications. And I think, as we saw when digital transformation took place, they will be able to create applications that are not possible to be created today. And I think our endeavor would be to enable that. And I think from the point of view of our customers, their endeavor would be to make sure that their talent does not get left behind. Because if it gets left behind, they would not be relevant. So I think our opportunity with respect to technology-related training, and likewise with respect to banking and other market segments that we service, are to be able to reimagine the way a job is going to be done and be able to educate our constituents on how to be able to do that job using AI so that they are significantly more efficient and they are able to imagine their product using AI in a way that's significantly better than what they could imagine in the past. And I think that's going to be a real key differentiator. For example, if we are able to enable a programmer to imagine applications that they have never dreamt of before, with applications that can change the way a corporation works, or change the way it produces products, or changes the way it automates business, or changes the way it services its customers, that will enable the organization to become significantly more competitive. Same goes for banks, the same goes for automotive companies that we serve, same goes for telecom companies that we serve. So our goal would be to enable talent so that they can reimagine how they can do their jobs. They can make them more impactful, to get them to imagine the world in a different way. That's really what we're trying to do. And I think we are making more progress than at least our competitors.
All right. Questions? Operator, are there any questions?
No, sir, we don't have anyone in the question queue at present. Ladies and gentlemen, you may press star and one to ask a question. The first question is
characterized.
Shetty, an individual investor. Please go ahead.
Good evening, sir. My question is regarding NIIT, which you have launched in a renewed way. And with the acquisition of IMNEO, can we be able to cross-sell this product into universities? And also, there is a lot of marketing expenditure which we have done to launch this NIIT. So, can you please tell me the response of this course in the market and the road ahead for this particular course, sir?
Thank you. I think Pankaj will be happy to answer.
Yeah. Thank you for the question. You are right. The acquisition of IMNEO creates opportunities for NIIT to be sold through another sales channel or go-to-market channel in partnership with IMNEO, and that is something we are exploring. We are already seeing encouraging early signs of possibilities there. So that synergy is definitely being created. And overall, on the marketing side, you might have seen we recently launched some advertisements with the NIIT program. We did this on YouTube and Instagram, and we are seeing very high engagement of these ads. Right, so we significantly higher than average engagement on both the channels, on YouTube as well as on Instagram, and we are seeing elevated traffic to our website after we've launched these ads, right? So definitely seeing a positive response. While the ads are focused on GNIIT, the response we are seeing is across the board, not just on GNIIT. Customers who are visiting the website are looking at the entire portfolio and engaging with the website accordingly. So on both fronts, the partnership with Amnio, very encouraging early signs, and I expect that to help us create more synergy and more opportunities there through their market channel. And on the marketing front, the campaigns that we've launched, they are showing good early signs of pickup, and we are seeing higher number of visits and registrations both on account of the marketing efforts we've taken. Vijay, anything you'd like to add to that?
No.
So
There is some noise on the line. Now it's gone. Yeah.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just wanted to get some clarity on this order intake data, how one should read it in terms of what is the mix of this across vertical, and also the tenure that typically this may take to get consumed. Any color insight into it should be of great.
Okay. Thanks, Rahul. I think Pankaj and Kapil will together answer this data. Pankaj and Umesh will together answer this data. I'll provide you with this data. But just to let you know, since you are familiar with the past of NIIT, in our other businesses, we also used to use a term called revenue visibility. In this case, these are fixed orders. That means a customer has committed that they would consume an amount of training, which could be in the form of whatever service that we are providing, defining the quantity, defining the rates, defining the period, and based on that, the order intake is considered. Order intake can be over 1 quarter, 2 quarters, 1 year, or many more years. What we do for order intake, and that's our internal norm, we have been using it for a long period of time. Our internal norm is the word order intake is used to depict orders which will get consumed in the next 12 months, whenever the order comes. So that is it may be a 3-year order, but we will only take that amount which can be consumed over 3 years, or 1 year, sorry, or next 12 months. Typical duration of execution of an order will be something which Pankaj will share with you. And the second issue which I would like to say is that it's a data which we have been tracking for a long period of time, but we thought instead of confusing everybody with multiple data elements, we had kept it simple to revenue. There was a request coming from many quarters, I think including yourselves, saying that we need more color and visibility on some of the lead indicators. And we thought order intake is a very good indicator of what kind of revenue can one expect in future. So, Pankaj, over to you.
Sure. Thanks, Vijay. You've explained what order intake is. And just to complete out what you talked about when it gets consumed. So it varies by business divisions. So the OEM training that we do, that kind of order typically gets consumed within a few days or a couple of weeks, because that's the duration of training. But some of the other transformation kind of trainings we do, that order goes over weeks and months, because that's a different kind of engagement we have with customers and a different kind of training program we do. On the consumer side, programs like NIIT are multi-year programs, and there are others like full stack software engineer, which is a 6-month program or digital marketing, which is 3 months. So the consumption of the order intake is accordingly over that period of time. So Rahul, just to answer your question, I'll repeat the order intake I mentioned earlier, and I will add a little bit more information there, so that it gives you the color that you're asking for. So order intake in Q1 was 1,065 million, as compared to 778 million last year. I will break this up into enterprise and consumer. So the order intake for the enterprise business was up 35% at 789 million, and order intake for consumer business was up 41% at 275 million. Right? So we saw a robust uptick on both these counts for order intake. And
You may just want to clarify that the order intake includes IMNEO.
Yeah, both of these numbers include IMNEO, since IMNEO came on board on 17th April. So this quarter number includes IMNEO. But even if I keep IMNEO aside, we saw a robust uptick in order intake, especially for the enterprise business. I hope that helps, Rahul.
Yeah, that is clear. Just a clarity further into it is that if I look at, you said around 70 odd crore of this is the enterprise business, and our overall enterprise business is 2/3, give or take. So the run rate from a 12-month executable point of view is barely for 4-month run rate. So are we trying to say bulk of the enterprise business is also on a short duration book?
Sorry, your question requires refinement. Let me demonstrate my understanding. What you're saying is that the enterprise order intake, do the orders get consumed in a shorter cycle? Is that what you are referring to?
I think that's what he meant.
Yeah, so what I'm trying to say that our give or take our business on the enterprise side is 200 crore on run rate. Our order intake is 70 crore. This is 12-month executable as you defined it. So I'm saying we have visibility of only 4-5 months in terms of the enterprise business. So that means that deal signings are pretty short tenure.
Which is right. Most of the deals would be of short tenures between 1 to 3 months.
Yes, most of the orders would be. Deals are longer.
Yeah.
So when we work with a customer, we work over a longer duration. But for order intake, we will take a specific numbered order that a customer gives us. So the execution of that will be short term, but the engagement with customers is long term. So if we are, say, skilling someone, about 2,000 people on Oracle, then the order intake will be by batch and month, but the program is for a 2,000 people program over a longer duration.
So in this example, you would take the number of people who could be done from a 12-month forward basis into your order intake.
So it will depend on the work, on the specific work order for execution, right? So while the engagement with the organization would be on the larger program, but the specific work order that they give us is what we count as order intake. And that will be executed on a shorter duration.
Understood. So although it is a 12-month book, executable book, but the total also would not be a significantly larger number than this because the tenure itself is smaller.
Yes, to an extent. And the nature of our business is also that we will keep getting orders every quarter. So it's not very different from what you mentioned. And we will build an order book, but we will also be getting new orders every quarter, which we will execute within the quarter also.
Right. And in the enrollment data, if you could give data X of the IMNEO part, what could be the enrollment number for the quarter?
You have
200,000.
it's about 200,000 people who went through. See, why I feel the order intake is a better measure. Enrollment was a very good measure when the average ticket price, if I may say, was in and around a particular number. Right now, with the kind of work that we are doing, the ticket price varies at an individual level over a very large range. And we thought, therefore, order intake is a better measure.
Okay, that I can understand. I'm saying what is the enrollment number, because I heard you saying 200,000. So I was asking, or 200,000 is the IMNEO part. Is that what we are trying to say?
No. Yeah. 200,000
Is IMNEO part.
is the IMNEO part. He's asking for the other one.
Total is 270.
70,000.
So if I have to go by that, I understand, as you rightly said, the range for the enrollment could be significantly different. But the base number for our organic business was 52,000. So are we saying on the core business, we have seen enrollment jump from 52,000 to 70,000 plus? YOY?
Yeah, actually, we have the data. We can share that with you very easily. But we decided we'll focus on this. So we have the data. We share the data.
Fair enough. That's it from my side. Thank you.
All right.
Thank you.
Q1 FY25, it was 48,827, and Q1 is 71 minus 16 is 55,000. It was 48,827, which has now become 55,000 as far as enterprise is concerned. And as far as consumer is concerned, it was 198 is including IMNEO. So you have to remove. Just take out those numbers. We can share that with you. It's not as different as you said it is. We'll give you the exact numbers while we address the other questions. Umesh, just take over.
Thank you very much. Participants, you may press star and 1 to ask the question. Next follow-up question is from Ganesh Shetty, individual investor. Please go ahead.
Hello, I am audible, sir? Hello?
Yes, go ahead.
Sir, we are organizing... Yeah. So we are organizing several editions of digital architecture conclaves. Whether this is helping us to acquire new business in GCC enterprise segment, sir? Or how is the response there?
Yeah, thank you for asking that question. I think Pankaj will be happy to answer.
Yeah. So this year was the third edition of the Digital Architect Conclave, and we had more than 150 participants representing a number of companies, and most of them represented GSIs and some of them represented GCCs. Right? These are practicing digital architects who attend the conclave. So the way we've positioned the event, it is a community that we have created of digital architects who come together and share ideas with each other, and they spend a day there learning about what's the newest thing happening in their space from each other and from speakers who attend the day. And in preparation for that, a lot of them actually spend a lot of time to participate in some of the activities we do there. There is a poster competition where digital architects come and share their innovative solutions and how they have solved problems for their customers, and a panel selects from that. So, as a program, it has been very successful. And in terms of downstream business, we have actually seen opportunities coming out of last year's digital conclave for us, which resulted in direct business as well. And of course, it results in our engagement with the digital architect community, right? It gives us access to knowledge, information, and access to mentors in this space, and helps us create that sense of community and belonging amongst digital architects across the industry. So we've built a very premium position for ourselves in this space, and it is serving us very well. Even this year, I expect greater engagement with some of the customers who attended the conclave, and resulting in future business from them.
Yes, my next question is regarding, in your opening remark, you have mentioned about building the organization and making it fit for the future. And this quarter, we had some high-level recruitment also. So, whether this investment phase is going to reduce, I mean, there will be lesser amount of investment in the future, which can increase our EBITDA margins in the present business. Can you throw some light on this, sir? Or the investment will continue in the same speed? Please require your clarification on that.
Sure, Dinesh. So, we are investing in building the retail side of the business, and investments in that space will continue for at least the next 4 to 8 quarters, right? Because that kind of a business needs the flywheel to go faster before it kind of generates its own momentum. So we will need to put that effort to build the retail side of the business, and of course rebuild the organization overall as well. So some of the investments will come down very soon, but some investments will have to continue. Investments especially in building content, building course material, and building the retail business. Those things will continue for some time. But yes, as a company, we will see some of the changes happening over the next few quarters.
Thank you, sir. That's all from me. All the best.
Thank you.
Rahul, while there is a pause, let me give you the data that you were asking for. In Q1 FY25, we had 52,630. In Q1 FY26, we have had 56,883. And both these numbers are without IMU.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from the line of Balkishan Mundra from Mundra Investments. Please go ahead.
Yeah, hi. This question is for Mr. Pankaj Jathar. So basically, you have given a revised guidance of 15 to 20%. So I want to know what will be the organic and the inorganic guidance for that, because I think that guidance also includes the IMNEO one. So I want to understand what is the core organic growth guidance and what is the IMNEO guidance, if you can specify that, please.
So the guidance you've given, like you pointed out, does include the inorganic number as well, which is now consolidated into our numbers overall. But if I was to tease it out, then the organic guidance would be between 5 to 10% for us, and added on top of that would be the inorganic.
Okay.
And the 25% of the guidance was also including IMNEO.
Yeah, that we mentioned.
even at that time.
Oh, okay. Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Ladies and gentlemen, you may press star and 1 to ask the question. As there are no further questions, I'll now hand the conference to the management for closing comments.
Thank you very much. Thank you very much, everyone, for joining the call and for your questions. As usual, your questions do open new windows in our own mind and help us sharpen our strategy as we go forward. We did acknowledge that the results fell short of our own expectations, but we are confident with our very strong order book intake as well as additions in the family like NIO, that we would be on this growth path. It's like what we were expecting to see from last quarter we'll start seeing from the next quarter. And we have Pankaj has given a guidance. Of course, that assumes that the environment remains the way it is and hopefully improves a little bit and does not give us any more unpleasant surprises. But thank you very much for your continued interest as well as guidance, and we look forward to interacting with you in person. Having mentioned that, we are in Mumbai on Monday morning. Monday, we are spending time with those of you whom we can meet, and we'll be very happy to organize one-on-one or group meetings to answer any further questions. Thank you for your continued interest. All the best.
Thank you.
Operator.
Thank you very much. On behalf of NIIT Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.